Hey there, Investorholics. Welcome to another ETF Spotlight review. Today we'll be looking at EMMG, which is the BetaShares Martin Currie Emerging Markets Fund. This one's a managed fund, but sort of, obviously the sort of managed active ETF type thing. So this one might interest investors that are chasing exposure to emerging markets. And obviously, having some exposure to emerging markets can be helping diversifying your overall portfolio by adding some global exposure and sort of giving you access to companies that you can't really get through domestic ETFs or even America, like some of the American ETFs. So this one might be of interest if you're looking for a little bit of different exposure, quite possibly in the long run. Yeah, it'd be good. This one's actively managed, like I said, so it's a little bit different. Hey there, Investorholics, it's Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content. You can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your financial life, expand your investment horizon, and crack your financial sky. Don't be afraid to give us a thumbs up and a subscribe. Okay, EMMG invests in an actively managed high conviction portfolio of emerging market shares and aims to outperform the MSCI Emerging Markets Index. So this one, as I sort of mentioned before, is a little bit different. This one's actively managed and it's managed by Martin Currie, which is a subsidiary of Franklin Templeton. Y factor, this one gives you exposure to the world's fastest growing markets. So emerging markets lead the world in growth due to improving demographics and a rising middle class and urbanization. Disruptive technologies and social reform also gives you exposure to global technology. Emerging markets are at the forefront of global tech revolution and include world-leading companies such as Samsung, Tencent, Alibaba. Most of those are Chinese. I don't know, if we should really be including China as an emerging market, but anyway, I don't make up the index or the definitions. Third point there is active selection. Investors benefit from a high conviction portfolio construction approach by experienced award-winning investment manager Martin Currie. So, obviously when we look at the fee structure, you're obviously paying for that privilege of having an actively managed fund. Whether it performs any better than any of the others, you're going to have to do your research and sort of work that out. Okay, so we have a net asset value at the time of doing the research, $5.39, trading just above that at $5.41. Market cap of just over $111 million. Management cost 1%. Distribution annually, and this year there was no distribution, so you didn't get a dividend. So exposure to emerging markets could form part of an investor's growth portfolio. Emerging markets give investors access to some of the world's most exciting and fast-growing companies. Yeah, I think really this one, I think when we look at the next slide, performance-wise, I just don't think it cuts it, to be honest. Regardless of what the promotion for this one says, I'm not sure if it's really worth the 1%. But you could use something like this in your self-managed super fund or something like that. If you're looking for some managed, sort of actively managed type product. I think there's better emerging market funds than this anyway, so we'll leave a card and you can have a look at some other ones up in the right hand corner there. Okay, as promised before, let's touch quickly on performance. 1 year performance, you're looking at negative 23%. Since inception, 2.5%. It's been running for just over 3 years, or a little bit over 3 years. So the fund takes a high conviction approach by investing in a concentrated portfolio of the best companies identified by Martin Currie specialists in emerging markets. It aims to provide long-term capital growth and maximize risk-adjusted returns, and may be suitable for investors looking for access to compelling long-term growth themes and emerging markets. You know, for a 1% management fee and looking at the performance of the last 3 years, I'm not sure if I'd be too interested in it. To me, you know, if you're paying 1%, you want better returns than negative 23%, and you know, definitely want, if you're in it at the float, you know, you definitely want to be seeing better returns than 2.5%. But these things, because it's so concentrated, you're going to get high highs and low lows, if that makes sense. So it's, if you're in it, you know, maybe you know why you're in it, but you know, would I buy it? I'd be very hesitant about buying into it, just for the fact that it's going to be, you know, very, very volatile in my view. So it might be something to avoid. Anyway, that's it for today. Give us a thumbs up and a like. Gratefully appreciate it, guys, for hanging around so long. Thanks, guys. Bye bye. Hey there, are you interested in learning more about personal finance and investing in the markets? If you are, smash the like and subscribe buttons down the bottom of the screen there. Crack the Sky Value Investing will be giving you up-to-date investing news and content, so you can navigate the markets wherever you are. Expand your financial horizon and crack your financial sky. Hey guys, I hope you enjoyed the video. Please give me a like and subscribe. Greatly appreciated. Thank you.